I see this as a 4-year cycle. If you said to me when Bitcoin was 126, in fact, I had conversations with my partners, everyone was thumping on their chest, we're at 126, we're right, everyone else is wrong. I said, yeah, we're right, but we're probably going to see a 40 to 50% correction on the way to 250,000. I don't think we go from 126 to 250. And it just has to do with the way Bitcoin's software was designed. It has to do with the hash rate. It has to do with the supply coming into the marketplace from the Bitcoin network that gets halved roughly every 4 years. And we're now into the back end of the halving cycle, meaning we've gone through the first 2 years of a 4-year cycle. And if you look back over the rolling cycles, you typically get a 25 to 60% decline in Bitcoin.
One of Scaramucci's strongest arguments is that Bitcoin's recent weakness should not be interpreted as a failure of the investment thesis. He explains that Bitcoin has historically moved in 4-year cycles tied directly to its software design and the halving process. Every 4 years, the amount of new Bitcoin entering circulation is cut in half. This reduction in supply has historically created powerful bull markets, but it has also produced significant corrections along the way. Scaramucci notes that even when Bitcoin was trading near all-time highs, he expected a correction of roughly 40 to 50% before the next major move upward. In his view, investors who expected Bitcoin to rise in a straight line were ignoring the asset's historical behavior. Looking back across multiple market cycles, Bitcoin has repeatedly experienced declines ranging from 25 to 60%. These pullbacks have occurred even during strong long-term uptrends. Many investors believe that institutional adoption, ETFs, and growing mainstream acceptance would eliminate these cycles. Scaramucci disagrees. He believes that until Bitcoin's halving impact becomes relatively insignificant, possibly several years from now, the market will continue to experience these periodic corrections. In other words, volatility remains a feature of Bitcoin, not a bug.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I don't see the thesis break. Maybe I'm too doctrinaire on this. I see this as a 4-year cycle. If you said to me when Bitcoin was 126, in fact, I had conversations with my partners, everyone was thumping on their chest, we're at 126, we're right, everyone else is wrong. I said, yeah, we're right, but we're probably going to see a 40 to 50% correction on the way to 250,000. I don't think we go from 126 to 250. And it just has to do with the way Bitcoin's software was designed. It has to do with the hash rate. It has to do with the supply coming into the marketplace from the Bitcoin network that gets halved roughly every 4 years. And we're now into the back end of the halving cycle, meaning we've gone through the first 2 years of a 4-year cycle. And if you look back over the rolling cycles, you typically get a 25 to 60% decline in Bitcoin. So a lot of people felt, well, we got institutional demand, we have ETFs, we have all this other stuff that's happening. We're not going to have that this time. Bitcoin is just going to go way off to the races. And I would push back on that. I would say, well, until you get to a de minimis halving cycle, which is probably 8 years from today, you're going to see this sort of the downward trend, which is very cyclical and very understandable based on the fact that the miners, because they have less Bitcoin that they're able to mine, they end up selling it to keep their revenues and their operating structure together. And so that causes a decline in price. Having said all of that, it's a very thin market. We're talking about $1.3 billion. We're talking about $1.3 trillion. I mean, Micron Technologies is $1 trillion now. Everything's $1 trillion. So this is a very small market. And so just any incremental demand will knock the price way up. And if you look at the drift down to 62,000, it's been on relatively low volume. And I'll tell you what I really like about Bitcoin right now, the bearishness. I mean, you're talking about fear on the fear greed index is at a 5. That's measured at from 0 to 100, 100 being we're maximum bullish. I mean, so we're as close to, okay, Bitcoin is over, let's throw the towel in. That's like Peter Schiff levels, you know? So to me, I like that. The other thing I like about it is the apathy. You know, when a security becomes apathetic, a token like this becomes apathetic, to me, it's a very good sign, because any slight move will probably be a trend upward. Last point on Bitcoin, we started the year with the expectation that we were going to have 75 to 100 basis points worth of cuts. Then we started a war. Now we're in a neutral position to possibly rate hike. So we've had 100 basis point differential in rate expectations. And so something like Bitcoin would also be affected by that. So again, I don't think there's a thesis break. I have been buying Bitcoin here for myself and for our investors. And so I like it long term. I can say that the younger Democrats and the younger Republicans in the House and the Senate want there to be oversight and propitious regulation for crypto. I would say that the older Democrats primarily want to kill and strangle the cryptocurrency industry. They want to strangle it in the bathtub. And so I think the younger people will eventually win out. I don't know when that will happen. If I had to guess, I think clarity does get passed because the crypto guys still have a lot of money. They pumped $250 million into the 2024 election. They got a lot of pro-crypto people elected. It doesn't strike me that the younger Democrats want to hassle with that. And so, even, somebody like Senator Gillibrand, who I have a reasonable relationship with, has told me that she still believes that the Clarity Act could get passed this year. And it's, it's gone through the committee. It passed the committee. And we'll see if it can pass. Remember, it needs 60 votes. So that's a big number. You're going to need some crossover voting there. But I think it would be good for the country to have it. If it doesn't pass, it will cause crypto to probably languish more than I would like to see it. But I still believe in the long-term fundamentals of the story. And, there's a woman by the name of Lynn Alden who I have a lot of respect for. She wrote a book called Broken Money. She's been on the Wealthy On Network. I've actually interviewed her. She has a great line. She says, "Nothing stops this train." What is that train? That is excessive fiat currency spending, cycles of wars, cycles of deficit spending, and the monetization of our debt. Our politicians are weaklings. They don't want to tax us to pay for the stuff that they're spending on. So they do something more pernicious and they do something more regressive. They inflate the money, which is the worst form of taxation, Maggie. So, and that's what we've been experiencing. And this is why things like Bitcoin, things like gold, I think will rise over the next decade. We're big crypto enthusiasts. We have a very big position in Bitcoin and Solana. We believe that eventually we're going to see a tokenization of assets, stocks and bonds, real world assets, etc. I would say to you that that's a big component of our investing. I would say that we have some investing now in the biotech space related to immunotherapy. I think that's another big wave of things that we want to take advantage of. I like the newer stuff. I guess as I get older, Maggie, I like the newer stuff. My attitude is, okay, yes, I have the plain vanilla stock and bond portfolio, but I want to see what's going on out there. I think stay young and stay vital. I'd like to see what the new technologies are. I want to see where 2035 is or 2036 is. What's going to be our reality 10 years from now? This sort of near future stuff. Maybe there'll be more peptide development. Eli Lilly's coming out with this new GLP, I think it's a GLP-2 or GLP-3, not going to pronounce it right, but apparently it causes weight loss without losing some of the muscle and bone density. So just think about where we're going to be in 5 or 10 years. Obviously the goal is to stay alive, of course, because I want to see all this great stuff. But the second thing is, for me, as I invest, I'm putting more and more of a component of my money into those things.
Interestingly, Scaramucci sees several positive signs in today's market environment. First, he points to extreme investor pessimism. Market sentiment indicators have fallen into deeply bearish territory, suggesting that many investors have become fearful about Bitcoin's future. Historically, some of the best buying opportunities emerge when sentiment reaches extreme negativity. When most investors have already sold or given up, there are fewer sellers left to push prices lower. Second, Scaramucci highlights growing market apathy. He believes that when investors stop paying attention to an asset altogether, it often creates the conditions for a surprise move higher. In his view, Bitcoin's recent decline has occurred on relatively light trading volume, suggesting that the selling pressure may not be as significant as many assume. Most importantly, he emphasizes that Bitcoin remains a relatively small market compared to traditional asset classes. Even modest increases in demand can have an outsized impact on price because the available supply is limited. For long-term investors, Scaramucci sees current conditions as an opportunity rather than a reason for panic.
The Western nations have released a tremendous amount of their strategic petroleum reserve. The European countries, the US, etc., they're trying to keep the prices down. And they've done a reasonably good job of that. Okay, there is an expectation that there is a deal somewhere. There's an intersection between the Israelis, the US, and the Iranians on a deal that will likely get the Strait open. And so I think the market is sensing that. I think the market believes that. So if we're all wrong about it, and it stays closed, that's 20% of the supply of the oil for the world, you're going to see a lot higher prices in the fall. I don't think the Iranians can handle that, by the way, because I think they need to sell oil here right now, given what's going on in their economy. I don't think the president can handle that right now. Again, just being objective. I'm not saying anything critical about the president. Just trying to be objective as an investor. He needs, for the midterm purposes and for the Republicans, he needs to get these oil prices down so that he can have a base case that they're trying to tackle affordability in the U.S. And so when people are generally aligned, Iranians, I have to sell oil. U.S., I got to get gas prices down at least $1 a gallon from where they are right now. You usually get a deal. Now, you may not get the omnibus deal where everybody's smoking the big peace pipe and they're sitting around together in this like grand summit. But could you get a 30, 60, 90-day freeze and sort of a cold peace among these nations? And I think that's what I'm predicting. And I think the market is also predicting that, which is reflected in current oil prices. You know, listen, this company went from a $45 billion total market cap valuation in 2020 to a 1.75 billion. Just think about the magnitude of that. So it's like 48 times. And so it's a very big move. Some of it is justified, by the way. I think if you look at the Goldman Sachs research report in terms of the revenue growth and the run rate of where SpaceX could be, and you think about what they're about to do with the iPhones vis-a-vis Starlink, the next generation of iPhones, you could have a situation where there's several billion phones hooked into Starlink. I think most of the airlines will be hooked into Starlink, the cruise ships, etc. I use Starlink. I have it at one of my houses. I find the thing to be exceptionally fast and very reliable, particularly in a if you ever have a weather incident and you have a backup generator, you're good to go on Starlink. I think that the big thing for me with SpaceX is Elon Musk. And I will just step back and say this, and Elon Musk probably wouldn't like this, but it is he's a human meme, Maggie. Okay. I don't think people should be betting against him. I think they found themselves betting against him and getting destroyed, frankly. So one, I wouldn't bet against Elon Musk. Number two, I believe in the long-term SpaceX story. Could it chop a little at this valuation? Sure. It did Facebook when it came public, now known as Meta, chop a little. It did. Google chopped a little. Amazon, it's probably the most dramatic story, dropped 8 or 10 times, at least 50%. But yet, if you owned Amazon over the last 30 years, you became wealthy. I mean, you only had to have a $10,000 investment in Amazon on its IPO to have $20 million today. So again, I'm a big believer in these companies that have these types of management teams. And I'll just point out, if you said to me over the next 10 years, will we need satellite technology, satellite delivery, commercialization of space, will the military and the defense industry be an important component of U.S. Economic output and also needs, national security needs? I think all of those answers bode well for SpaceX and for Elon Musk. So I'm a big believer. And again, I fully disclose, I'm an owner for a long period of time. And this is what was the precipitation to putting together these SkyBridge unicorn return funds, because I looked at the landscape and said, okay, wow, there's a lot of private companies because of regulation where they've made a decision. You know, when I was younger, you would have a small company have some revenues, and then they would go public, and then the retail markets would be able to participate in that. That would include Microsoft when it went public in 1986. It would include Google when it went public in August of 2004. And I can give you many examples, but the regulations got very, very tight, Maggie. And so a lot of companies said, you know what, I'm going to wait until I'm a monolith. Uber waited. SpaceX is waiting. Anthropic is waiting. It's going to be $1 trillion market cap. OpenAI is waiting. And so we tried to create a vehicle a few years back that would give clients access to these near public offerings, these late stage companies that have exceeded and succeeded, but they're not yet public. And there is usually a successful arbitrage between the private market capitalization and the public market capitalization. Now, again, not always. I just want to warn investors, everything comes with its itinerant risks. But the notion that we could put a portfolio together using our access, our 40 years of experience on Wall Street and our ties into the venture capital community, could we cherry pick a portfolio of great names? And so thus far, we've been able to do that. I think you've seen our deck. I'm happy to share our deck with individuals that have an interest, but we've got some great names in there, including OpenAI, SpaceX, Anthropic. We have some other nifty companies in there. Epic Games.
Yeah.
Maggie, if you have sons, mostly sons, I would say some daughters, but mostly sons are playing all the Epic Games programming, and Disney just did a big deal with Epic Games about 2 years ago. We actually have Liquid Death. I don't know if you know that name, but it's a very young, hip brand.
Yep.
They make these beer-like looking cans that serve non-alcoholic beverages. It started with water. It's moved into other beverages, but it's a unbelievably fast-growing brand. And so we bought a piece of that as well.
Beyond Bitcoin itself, Scaramucci is excited about the broader transformation of financial markets. He believes the future will involve the tokenization of real-world assets, including stocks, bonds, real estate, and other financial instruments. Tokenization could make assets more accessible, more liquid, and easier to trade globally. Instead of relying on traditional financial infrastructure, ownership could be represented digitally on blockchain networks. Scaramucci sees this trend as one of the most significant opportunities in finance and expects it to reshape capital markets over time.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.